What's up, traders? Let's go over the Edgicator Trading Toolbox, which takes 3 key indicators a lot of traders use to inform their trades and gets rid of them so we can free up our chart and visualize the same data in a much more useful and efficient way. Now, first off, there's the volume average, which, as the name suggests, shows us the volume and its average over time, basically letting us know whether or not the current volume is above or below average at the time. Now, the way that it represents this is, as you can see here, for example, the volume average was below the volume average line, and our stock was just moving sort of sideways to down to nowhere, really, just slightly down. And then all of a sudden we had a peak, and the volume was above average, and the price got a little push to the downside at that moment before tapering off below average again, and then once again on above average volume it shot to the upside. So the way the trading toolbox reflects this is plain and simply by these little dots right here on the candlesticks themselves. As you can see, those little white dots, they're also editable in the settings. You can change their color and their size, but basically that lets you know that at that moment there was above average volume. Whereas when there wasn't above average volume, the volume was below average, there is no dot. So in reality, we don't actually need the volume average indicator. We're going to free up that space because we can just see that right off the bat whether the volume is below or above average just by looking at the chart on the candles and whether or not there's a little dot to let us know. Now, next up, we've got the RSI, the Relative Strength Index, which calculates the magnitude of recent price changes based on an average of gains and losses in order to suggest when a stock might be oversold or overbought. Now, basically, it shows us this by demonstrating a line right here representing the RSI at 30 and a line up here representing the RSI at 70, because it suggested that when the RSI is below 30, the price is oversold. When the price is above 70, it's considered overbought. So as you can see here, when we had no real volume going on, it was below average volume, and the price was moving kind of sideways. The RSI was neither in overbought or oversold territory. But once we got that spike in volume, and the volume was above average, and the RSI at the same time just so happened to go below 30 into oversold condition. And the deeper it goes into oversold condition, the way the trading toolbox represents that is by changing the color of our candlesticks from light blue to a darker blue. So this time it didn't quite go that far. It didn't get quite as deep into oversold territory, but it did go from, almost, hey, we're approaching oversold territory. We're getting deeper into oversold territory. Not quite that much. But then as it shifted, as you can see, it went back into neutral territory. Then the RSI went above 70, and now we're in overbought territory. But it also didn't make it that deep into overbought territory, which is represented in the trading toolbox by the colors going this time from light yellow to yellow. Now those colors, just like everything else, is also editable in the settings, which I'll show you in a little bit. But since this isn't so predominant right here, let me move to a different, there we go, another part in the chart where it's a little bit more predominant. So as you can see here, it went deeper into overbought territory, and as such, the trading toolbox changed the colors of our candlesticks to reflect the fact that it was going deeper into overbought territory, meaning that the price was going further and further above 70. Whereas, let's look for another one. Ooh, that was a big dip. Well, here's one that didn't go that deep. I'm looking for another oversold. Well, yeah. See, this one, obviously that was a steep drop. It went immediately. Look at how far below 30 the RSI went. So we went deep into oversold territory right off the bat, and then it tapered off. So in this instance, the color went from a dark blue, from blue to lighter blue as it tapered off. So anyway, the bottom line being, we don't need the RSI indicator taking up space, because we can already see what's going on with the RSI. Just by looking at the chart, we know if it's oversold or overbought, and just how deeply oversold or overbought it is. So I'm going to go ahead and get rid of that one. And now, finally, we've got the MACD, Moving Average Convergence-Divergence, which attempts to calculate whether the momentum is strengthening or weakening based on a calculation between a long-term and short-term moving average. Now, as you can see on the chart here, basically what traders are looking for is the crossover. So as you can see here, the two moving averages in the MACD are, the gap is widening between them, the price is going upwards, so is the RSI. In this instance, the volume average had already started going below it as it peaked, but then it starts to, the two moving averages in the MACD start to converge and they cross over, and now we're going to the downside. They've crossed over and the gap is widening as we continue to go down slowly. And once again, further on down the line, you know, it still hasn't crossed over. The price hasn't really, it's been going slowly down to sideways. And then finally it crosses, the MACD crosses over and we got a little bit of upside. But anyway, so what we're looking for is when the MACD crosses over, because it seems to suggest that there's a probability that the trend is going to reverse, right? So on the chart, as you must notice by now, that's represented in the trading toolbox by these arrows. So if the MACD crosses over like it did right here to the downside, you can see it crossed over, we went to the downside, and then the next moment, you know, 30 minutes after whatever, it crossed over to the upside, which is represented on our chart because of the trading toolbox with an arrow to the upside. So bottom line being, we don't need the MACD either, because we can see all this data without cluttering our chart with all these indicators. So just to review, we can see the average and whether it's above or below average because of these dots, whether they do or don't exist on our candlesticks. We can see the RSI based on the colors of our candle bars, and we could get an idea of just how deeply into overbought or oversold territory, just like that, just by looking at our chart. And as far as the MACD is concerned, we know when they've crossed over to the upside or the downside because of the little arrows that show up to let us know that the MACD is crossed over up or down. Now, one more thing about the RSI. I actually included a label here in the upper left-hand corner. This label is always going to have a background, the color of where the RSI is at the current moment. So if we go to the current price action, oh, yeah, okay. So the RSI basically is only at 62. It's neither overbought or oversold. So the RSI remains at a neutral white color. But if you start getting into overbought or oversold territory, so for example, at this moment in time, the RSI label over here would have had this background color, or this background color, or this background color at this moment in time. So it's always going to reflect where the RSI is at as far as how deeply into overbought or oversold conditions, if it is in overbought or oversold conditions. Now in the settings, you actually have the option to turn that off. Right here, monitor RSI, yes or no, you can turn that off. I like to take off the value, so show RSI value. I don't need to see the 62 or whatever, because all I want to know is whether or not, based on my configurations, if it's in oversold or overbought territory or approaching oversold or overbought, which I know by the color of the background or the color of the candlesticks on the chart. So I don't need to see that. And as you can see, it'll just be a box that changes colors based on the RSI. Now you also have the option to require above average volume for RSI. So all that basically means is if you turn this to yes, then the only time it's going to show you the colors of the bars or the label changing, meaning that it's overbought or oversold, is if also at the same time the volume is above average. So basically it's requiring two indicators. The volume needs to be above average and the RSI needs to be overbought and oversold before it'll actually show you the colors changing on the chart to let you know that that's the case. And the next option is just basically to say how many times above average is the volume before it triggers the RSI warnings. And you can change that to 2 times, 1 time, 10 times, whatever you want. Now, I call when things start getting overbought and it goes from light yellow to yellow, I call that heating up. So that's it getting overbought. That's the first level, which I'm saying in these settings that starts at 67. So before it starts getting overbought, the RSI is above 70, I already start changing the color of the bar to the light yellow to let me know, hey, we're starting to get into overbought territory. And then the next level is that when the RSI is at 74, the bar changes again to a darker shade of yellow to let me know that we've gone deeper in further above 70 into overbought territory up until the fourth level. So there's 4 levels for heating up and for getting overbought, and also what I call cooling off when we're getting into oversold territory and going from light blue to blue. So there's 4 shades of colors and there's 4 levels of when the where the RSI is at that we start triggering those warnings. Now, like I mentioned, you can change the colors and size of things right here for the volume alert, the little dots on the bar. You can change the size and you can change the color of it. The heating up, like I mentioned, you can change those colors as well. It's heating up 1, which is basically the first level of overbought, and heating up 2 and 3 and 4, which is basically overbought 1, 2, 3, 4, those 4 different levels as defined right there. And then we have the cooling off, same thing. You can change the colors, cooling off 1, 2, 3, 4, which is basically the oversold levels, and you can change those colors so that they change based on the values when the RSI reaches these particular values or whatever. So, and then the MACD cross up or cross down, MACD crossover up or down, we can change the size of the arrow, we can change the color. You can also technically change it to a wedge, but it puts it on the opposite side of the candlestick. It might look right for some people, but the bottom line is, technically if you wanted to, you could even change it to a point, a little dot as well, to let you know that there was a crossover. And you can change the color of the dot. So a red dot means up, or a yellow dot, green dot means down, whatever you want to do. That's there. A lot of that stuff doesn't really quite work quite well. It just looks off and it's confusing. But if you find something else that works for you, that's totally available. Now, I think that pretty much wraps it up, right? Did I cover it? I think I got it. Anyway, if you guys found this useful at all or helpful or whatever, please go ahead and subscribe and like. And if you happen to buy it and you play around with those settings for that RSI or anything else and you find some configuration that you think is useful, please go ahead and share it in the comments. Take care, you guys. Good luck.